the mighty State Bank of India has always been seen as India's big bank that spreads across the length and breadth of the country with, some 20,000 branches. But SBI's new avatar is that of a nimble digital bank. Its just launched app, YONO, already has 5 million registered users, and its SBI Anywhere app has 10 million registered users. So today we have with us the Chairman Rajnish Kumar to talk about a new SBI altogether, the nimble digital SBI. Thank you very much, Mr. Kumar, for joining us in this new approach you have for banking. Just tell us, in your mind, what are the highlights of the new digital SBI?
So new digital SBI has many things.
Okay.
One is what we do at the back end in terms of data analytics and using the data. SBI has one of the richest bank to have the huge database, because we serve almost more than 420 million customers. And we are very proud of this fact that almost every third Indian is dealing with the State Bank of India. And in corporate banking, we are very big, in a small business, agriculture. And the power of data analytics is still to be unleashed. And we are very systematically working on that. And using the power of data analytics, both what we call internal and external, many products are now being designed. What you spoke about YONO, that is a front-end mobile application where the customers can do now almost anything relating to banking, as well as their investment, insurance, card, online shopping, book and order. And anyone who has used this application, they are very delighted. It is getting lot of traction with the millennials.
So I want you to walk with me, because we want the ambience of your beautiful lawn also to be available to your viewers. Just to expand on this, how much have you all spent? I mean, if you can give us a cost-benefit analysis, are you able to, if you can give us an idea of what is the expenditure and how much have you been able to draw in terms of?
So basically, even for YONO, which we are talking about, we have a separate P&L account. Whatever investment we are making, that is all accounted for and amortized. And in terms of revenue generation or the cost saving, all is being accounted for. All major projects we are trying to put in this philosophy of drawing a separate P&L. It is a notional P&L.
Of course.
But in today's time, whatever we invest in technology, that is all an investment. And it is not a cost.
So what kind of benefits have you got? Have you don't have to open fresh branches. Is that the advantage? Have you been able to close down some branch? Is that the advantage? Or have you been able to pull out some staff from back end and put them as sales officers?
So that is the main advantage. Say for example, savings bank account. Before the Supreme Court judgment came, we had started opening 25 to 27,000 accounts daily on YONO. If all those accounts are to be opened at the branches, at least we will need 3,000 people. So that is the advantage in terms of many ways, like whatever surplus staff is there. So they are available for sales, services, advisory. As of now, we have not closed down any branches because we are moving in a big way in digital. But the format of the branches is undergoing a change. They are much smaller. And going forward also, the presence has to be felt across the country. And the model which will be there going forward is that the digital becomes the main platform, but at the same time there are branches where people can go get advisory, hand-holding. So both will coexist.
So you'll have much smaller branches?
Much smaller branches in format.
So you'll be selling off land? Is that,
if there is any surplus land, then it is there. But sometimes, like if it is a rented premises and the premises is huge, then you can go for a smaller premises also. But it all depends upon the location and but savings are very much
already generated, or you are
generating. One is that our overheads. So it will be reflected there that our overheads are very much under control.
Lesser use of air conditions.
Everything. All expenses go down.
Let me come to the customer. Are the customers now, able to get, say, 3-minute loan, 6-minute loan, or 15-minute loan? The way has your data mining reached that stage?
Yes. So if on YONO we are sending the pop-up for pre-approved personal loans. and that is instantly available.
Okay.
Similarly, loans against, say, fixed deposits.
Okay.
So one doesn't have to go to the branch either to open a fixed deposit or to get a loan. It all can be done on the digital platform. Same is now we are building journeys around home loan, car loan, education loan, salary loans. So what, as I've said, that the vision is that within 2 years' time from now, we have already spent 2 years and 2 years more. It will be a complete bank. All the processes will be digitized and available on you.
Are you seeing a lot of your retail guys not coming to branch at all? I mean, will you go to the extent of penalizing them if they come to branch?
No, not at all.
Okay.
So our philosophy is that it is customer's convenience.
Okay.
Whatever is their comfort level, if they want to come to the branch.
Like for instance, many of us would not have gone to a branch in a very long time because you can
don't
pay all
need
your
it.
bills on the net.
Everything. So you don't need it, but still there is, as I said, that
But you're seeing that transition.
but still there are the footfalls in SBI are very high.
Okay.
Because the customer segment we serve, so it is across.
Yes.
So there is a certain set of segments, customer segment who will not come to the branch and will be all using internet banking or mobile banking.
Yeah.
But there is a segment of customers who still come to the branches.
Yes,
So that's what I said, that for a bank like State Bank of India, where we are catering to the customer segment underprivileged to the, I would say, richest. So in that scenario, all are needed. There are many people who are not comfortable with mobile banking, not comfortable with even debit card or ATM card. So we have to take care of those.
No, I can
also.
imagine if my father were alive, he would not have been able to do it. He would still have gone to the branch to get his pension or whatever. But what about cost savings in terms of any number? For instance, by the end of this year itself, will you see it reflected in a lower cost to income? I think now cost to income is getting higher because of provisioning. But do you think by, say, FY20, you can distinctly...
say by March 21.
You can distinctly see cost to income.
Our internal target is we should be able to bring it down to 40%. But that is a bit, I would say, ambitious, but not entirely impossible. And that will be, of course, driven by one is definitely the revenue growth is very much there. It is back. There is a complete control over the cost. Plus the digital, and digitization is not about YONO or front-end application. Even all the branch processes are getting digitized. It is some sort of an omni-channel experience where whether it is on the mobile or portal or the branch, experience will be identical.
Do you see a time when you will not have to recruit, or has it already come, that you don't have to recruit a large level of force? I mean, you may still want high technical personnel or corporate investment banking personnel, but the lower level of personnel, lower skilled personnel, you don't need to recruit at all because you are redeploying.
Whenever who is coming, they are highly skilled, let me tell you. Even if it is at a what we call junior associate level, the qualifications are very good. They all are tech savvy, young, pleasant people. But every year the retirement is 12 to 13,000.
Okay.
So we can't leave that gap. So
no. Do you have to replace the entire 13,000?
Not entire. Maybe up to 75% as of now.
Okay.
So every
that
year
itself is lower cost to income.
Lower cost to income. And one is that because the new people who come, their salaries are much lower than the retiring people. So that is one aspect. And the other is that the number of people itself will go down, but progressively. If we don't recruit, then what happens after 2-3 years? There is a huge gap at the mid-management level. That is what we saw when there was for 3-4 years, there was
the missing middle.
missing middle. So that was a big mistake to completely stop the recruitment. That should never be done. But yes, the number of people to be recruited, that can be depending upon the progressive.
Okay, actually you must have seen that now famous Morgan Stanley report which expects that you're going to have a huge saving in terms of provisioning. And as you just said in passing, that loan growth also has picked up. So there are three big factors in that case. Loan growth has picked up.
We are now more than 14%.
Okay, at the upper end of your guidance.
Yes.
And you have got, provisioning perhaps which will tough out.
Which will taper down.
Okay. At which quarter does it taper?
It has already started happening.
Okay.
And one is that even when provisioning, there are two things. One is minimum regulatory, what the regulators prescribe. But our approach has been go beyond that and do a little bit upfronting of the provisions.
Okay.
So that the current credit costs, they don't get loaded on the future earnings. So that is the whole approach. That as much as possible, the future earnings should become less volatile. Because in today's time, even if we show profits or this thing, so market is ready, everybody believes that we are passing through the challenging times. But what now we don't want to do that there should be any problem in future as far as banks' earnings are concerned. They should be steady and stable.
Yeah, exactly. Just to complete this argument of 40% cost to income, there are three factors that are going to help you: loan growth, your provisioning coming drastically down by the time you're mid FY20 perhaps, and thirdly, all these digital investments are going to start giving you cost advantages. So even if you don't get to 40% cost to income by 21, what would be a more realistic figure in FY20? A good 5 percentage point fall or 4 percentage point fall?
45 to 46% is what we should be able to achieve by March 20. And that seems to be feasible now.
Okay. Fine. On that note, we're going to take a break, sir. And thereafter, we have to ask you about the more pressing questions, whether the NBFC issue is behind us and therefore whether there is a genuine turn in the economy. We are back in this beautiful ambience of the SBI Chairman's residence in just a minute with lots more questions to him in his own lawn. Well, the big headline Mr. Kumar has given us so far is that the cost to income savings that they are going to get in the next 2 years from the digital application could be as high as bringing the cost income to 40%, which is, dramatic. But Mr. Kumar, let's move to the other aspect, which is growth. Now, loan growth is definitely picking up, as you said, 14% just now. Is a large part because you are buying up NBFC loans?
Not because of the buying from the NBFC. The growth is coming more from the retail, which is steady for the last couple of years. And there is a demand, particularly from the government entities. We are seeing a huge demand from those entities. They are large ticket loans. And SBI,
so PSU entities,
all AAAs or highly rated PSUs. So it means that the government investment has picked up a lot as far as the infrastructure.
So CapEx has started.
CapEx driven by the government, and this is normally what happens. That first the CapEx cycle has to start with the government spending, and then later on the
is this
private
roads
sector
and infrastructure types, or is it
all
say oil,
everything.
ONGC,
everything.
Okay.
Oil and gas, roads, power finance. Railway finance. So these are all either infrastructure or related. And in last 4 or 5 months, we have extended quite a lot to these.
That's very good to hear. Because actually we have only heard much of private capex. It's very good
but
to hear.
Private capex is still lagging, but it will follow.
Okay. Now I wanted to ask you about this NBFC's real estate piece. The loans that you all are buying are more priority sector loans, I would assume.
Yes.
Are you worrying, this is more as an observer, that the large loans, builder loans given by, or LAP loans, given by NBFCs and HFCs may still be a problem? Do you expect something to surface?
I don't foresee a big problem. And most of the loans NBFCs have been able to roll over. Even today there is a news item that now they have started again getting back. So that way, like the situation which was prevailing about say 3 or 2 months back. So now the situation has improved considerably, and it all depends upon that any HFC or the NBFC, what is the quality of their portfolio with the builder. But we have to also keep in mind this fact that in the last 3 years, the offtake of the inventory as far as real estate is concerned was slow. So builders were holding on.
Yes. So now they may, have to allow the prices to fall.
To some adjustment in the price and sell off quickly and then pay off their loans.
Okay, but do you think that maybe 1 or 2 small Amrapalis can happen?
Oh, it can always happen.
Okay.
We are a large economy. So,
yeah, of course.
It is not that it will happen.
But do you think that the need for a special dispensation to NBFC is not there, considering the Reserve Bank has boosted OMOs considerably?
Right.
Now they're going to give like 2 lakh crore from December to March.
Right.
So you think
I think overall liquidity in the system will be all right. And then it is all about the credit quality of the NBFC themselves. Where the
it's
lenders
not a
will
liquidity issue, it's a
credit issue in any case, like nobody can do anything about it.
that. No matter how much money you throw at it.
If it is a bad credit, it is a bad credit.
Okay, fair point. So that solves the liquidity problem is getting solved, and it's not whatever is remaining is an asset quality problem. Let me come to asset quality. I mean,
we can't avoid that discussion.
It is a big thing that we don't start with NPAs these days because they've clearly, receded to the background. But over there, I wanted to ask you about these power assets. Power assets, they're getting stuck because 1 or 2 banks are saying no. Why are you not using that intercreditor agreement? That's not helping?
Many of these cases were started even before intercreditor agreement was signed.
Okay.
But agreement or no agreement, this always happens in any consortium or multiple banking.
Okay.
Building consensus among so many lenders is always a tall order. So that is what we are seeing, because all banks, they are governed by their boards, and in board also you have everywhere 5-6 members. So you can imagine that if there are 25 banks, then the decision makers are the 300.
Yes,
so when you have 300 decision makers, obviously building consensus is not easy.
It's a problem. But in your Samadhan, you had 8 projects?
We had identified initially 11, 12, and later on we were focusing on 8. So 3 out of 3, 2 are already done, in fact. And 1 is in very advanced stage. Couple of more, I believe that they can get settled.
Okay.
So
but any of them outside, it can be done under ICA so that it is quick?
So ICA, as I said, that after signing of the ICA, any new assets which are under stress, so that we will take under ICA.
Now for the first time we get the feeling that these stressed asset funds purchases have really stepped up.
Yes.
We've got Aeon Capital. We saw a lot of funds coming in. You think that market is
developing?
Genuinely developing.
Genuinely developing.
Because you are the big player there.
Right.
You can call the shots because, you're...
No, definitely there is a demand. Funds are coming in, and they have their own sectoral preferences. Somebody is active in power, somebody is active in road, somebody is active in, say, steel assets. So that way, the demand is coming, and there is a huge interest, and this is the opportunity.
Absolutely.
When those people...
They will also get it.
No, when they come, I say, this is the opportunity. After 1 year, we will not give you any opportunity.
Okay. So roads also are happening?
Roads are also happening. We will see now that ILF has come out with 21 road projects.
Yeah.
So I think it will receive good response.
Okay. And other non-ILFS roads also doing well?
Roads also. So there is interest in the sector, and there are a lot of funds who are looking at the opportunity.
So now there may not, we didn't hear that AIF being set up under Sashakt. The creditor agreement happened. After that, we have not heard.
But there is a progress on that front also. Even last week, we had a meeting of all the investors.
Okay.
So AMC has already been incorporated, and then now we are looking for the anchor investors who will invest in those funds. And there is interest there. So maybe in next 15 to 21 days, we should have some commitments that how much, which fund or institution or bank is willing to invest. So that work is going on.
So you see some dramatic resolution in non-IBC cases?
Dramatic, I don't know, but resolutions will definitely happen.
No, the 2,000 crore and above, many of them have already been, have had to go into NCLT. But outside that, just below 2,000 crore have not been taken. So there you expect...
That is where all the effort is.
Speedy resolution
Speedy
will happen.
resolution.
Okay. So do you think that recovery from resolution is going to pick up for banks like SBI?
Oh, yes, very much. Like this year, even the last 6 months, for all the banks, the recovery has been much higher than previous year.
Okay.
And this coming 6 months, and depending upon some of the high value cases, which are at various stages with the various courts. So if all of them get settled, say, before 31st March, then this year would be a very good year as far as recovery, upgradation is concerned.
Of course, if you get that one big IBC
that itself
case,
is a big...
SR will give you a lot of money.
Yeah.
You're expecting hopefully by March?
Before 31st March.
Okay. Now, the other obviously important point I have to ask you is farm loan waiver. Your predecessor has spoken on several fora saying that it hurts, the credit culture. Would you worry that future farm loans will be
I think this is something where bankers will have to learn to live with.
Okay.
But
yeah, I know.
Fact is,
it is becoming competitive waivers.
That's what I'm saying. But the fact is that, one, this is not a permanent solution. It has not helped in the past, it will not help in future.
Okay.
The fact is also that many a times the farmer's income cannot support the debt which they are taking, because income is low. Then whether we focus on augmenting that income or we take the route of loan waivers. So better and preferable way will be boosting up the investment in the agriculture, and in what manner can we support the farmers to be productive.
No, that's
Indian
a great
agriculture
point.
productivity is so poor in India, and then on the top of it, if you burden the farmers with the debt, so how do they pay even if they have the intention to pay?
This Raitu Bandhu in Telangana is
I would consider it to be a
income.
much better option than loan waivers. It does put a certain fiscal burden on the state, but both puts.
Yes,
but at
waiver
least
also
in that, the Telangana model, from bankers' perspective or from whatever way you look at it, I think it is a much better way of assisting the farmers rather than loan waivers.
Okay. Now, two quick questions on loan waiver itself from the banker's point of view. In Maharashtra, it took very long to identify the borrower. Has it now at least
things are much more
underway,
stable, because the difference between Maharashtra and other states, like say for UP government, was that here the Maharashtra government decided to waive the loans even for higher amounts. But above a cut-off, say 150,000, the farmers were required to pay, and the relief was limited to 150.
Okay.
Whereas in UP the scheme was very simple, that up to 1 lakh and you get the relief. So that's why implementation was easier, and that is where, like, even if any loan waiver or anything, the things have to be kept simple, and probably then the implementation will be much better, because the idea is that once the loan is paid off, then the farmer should be able to avail the loan immediately. But as I'm saying, that if the fundamental issue of agricultural productivity is not addressed, we will continue to have this situation.
This is a great point at which to end this conversation, but I still have just one technical issue. The farm loan waiver which has just been announced, Madhya Pradesh, and which will be announced in Chhattisgarh, are these loans already bad? And therefore, for you, it is an advantage because it will get paid by the government sometime,
It is a short-term advantage.
Is that the way it will work?
It is a short-term advantage.
Or are they now standard loans which will become NPL?
No.
What is the situation now?
No. Whatever it is, that in the short term, immediately, because the NPA gets paid, so to that extent you see a better NPA
recovery.
But after that, the problem again starts, and again the NPAs goes up. So agriculture NPA from 2010 onwards, they have gone up.
Okay. So that is why the answer really lies
in the boosting the income. Because unless there are two things in any credit, whether it is agriculture, business, corporate, anybody. One is the intent to pay.
Yes.
And second is capability to pay.
Okay.
So I would say that the common man's intent to pay is much better in India.
Okay.
So there is absolutely no doubt about it.
And we should not destroy it.
We should not destroy it. The intent to pay should not be destroyed. Capability to pay and alignment of the debt servicing capability with their income. That is where a permanent solution will be found.
Spoken like a statesman, so that is the request to the ruling class, that agricultural productivity be boosted, incomes be boosted, so that the intent to pay is retained and the ability to pay is boosted. Mr. Kumar, it was a pleasure speaking with you, and a privilege that you allowed us to shoot this interview in your very, very beautiful lawn. Thank you so much.